All right, so I changed up the view again. Hopefully this works. I started writing some stuff up on the board, and then what happened was, oh, if you see the camera going in and out because I pressed auto zoom. So anyways, I don't know how this is going to work. So I'm playing around with things here. So what originally happened was I was trying to do things on my iPhone, and it's not working, okay? So going for it, I'm going to try this on computer now, and hopefully it works a little bit better. I'm already finding out that I don't like this Zoom feature, so this will be the last we use of that. Now, okay, so let's get started with Chapter 810. Oh yeah, and just a reminder, if you have not submitted in your quiz, please do so. Okay, so again, we only got a month to go. So again, if you just, hand in the quizzes, hand in the midterm, hand in the final, you're going to pass. Okay. Again, everything's open book now, so it makes things a little bit easier. No, not a lot easier, but a little bit. Okay. So again, make sure that you get all that information. So we're going to start today. Again, and I'm going to do the slides now on a, as you can see right up here. Okay. I'm going to do the slides now, probably 2 classes at a time, just because I find it's more efficient. Okay. So again, for Monday's class, I'm going to do slide 15 to slide 30. Okay. We're going to cover readings page 811 to 815, and then from there, okay, we're going to go to page 816 for the next day, page 816 to page, where is it? Page 19. All right. So we've got to look at, now we're going to deal with, starting at page 811, 810 or 811, let's just say 810. Okay. We're going to look at substantive audit procedures. So what substantive audit procedures are is test the details. Okay, so that's an example of, I wrote it up on the board here. So we have our utilities. We know, I know just by looking at this, and if you get into the audit biz, you're going to know as well. Okay, if it's a utility, you look at your utility GL. Okay, so you've tested controls before this chapter, and you say, okay, we want to make sure that transactions are getting recorded and they go into the utility GL, and the total number here goes onto the trial balance. Okay, so GL, the trial balance. Then we take our trial balance and we create our financial statements. Okay. So yeah, that's great. So that number equals 1,000. So it's just carrying. Now, the issue that we have is we don't know if these numbers are right. Okay. So that's where we're going to get into, because for whatever reason, okay, the company, now we're moving on to substantive audit procedures. So we're going to do test of details, analytical procedures, and we're going to use computerized models for substantive testing. Okay. So again, we've tested the controls, and we don't really have a good reliance on their system. Okay, so we're not going to rely because, again, maybe we have inherent risk is high, control risk is high. We've got to set our detection risk at low. So again, we cannot rely on their system. Okay, but we found little bits and pieces of information that are okay because again, we've looked at we can trace some of the things. The GL number, the total balance for the utility account goes to the trial balance. Okay, great. But now we need to test details. Okay, so again, we went over the 3 types of audit procedures: substantive audit procedures, test details, analytical procedures, and using computers. So let's get into detail. What's a test of detail? Okay, well, with test of details, okay, these are substantive tests other than analytical. So with analytical, we're just going 1,000. Say this is 2020. So our 2020 utility balance was, in this case, 1,000. Okay. Now in 2019, let's just say it's 4,000. Analytically, I'm just going to look at this and eyeball it. I'm like, something's not right. Okay, right off the bat, utilities are 1,000 in the current year, 4,000 in the prior year. The utility should always be the same. Maybe not dollar for dollar, but really close. They may rise for inflation. Then you're going to want to say, okay, well, was it a colder winter, a warmer summer? Why would they use more utilities? Okay, so again, you're diving in when you're looking at the analytical procedure. But before we get into that, we're going to test the details. So now we say, okay, well, something's wrong here. It has to be. Only $1,000 of expenses last year. There were 4,000. We might go back a year further. What was it like in 2018? Well, 2018 was 3,900. The 4,000 the next year makes sense. To 1,000 this year makes no sense. Okay. So now what we're doing is, again, we're going to go pull the GL. We're going to ask an AP clerk, hey, can you pull up a GL for me for 2020? Yeah, no problem. And this is what we see: 1,500, 400. Well, you're going to know from experience, at minimum, okay, there should be 12 payments. Here, there's only 3. You've got an issue there. Now, you might say, well, what if they pay late and they pay it all at once? Okay, still, but you should have that near 4,000 amount. Okay, so we're going to dive in there and we're going to say, okay, well, where are these other utilities? So now we got an issue. Okay, the issue that we have is when we go to our assertions, it's not complete. This expense is not complete. Okay. Now, we know it'll occur because we can't run our business without electricity. So either there's a massive amount of AP that we're owing to Manitoba Hydro for this company, okay, or the accounting clerk misclassified it and put it to a wrong account. Now, not a big deal there because in the end, there's going to be no effect on tax. Cash flow is the same. But again, we wanted to get it accurate. Okay, we wanted to go in the right account. Okay, so again, with the test of details, these substantive tests, they're other than analytical procedures. Okay, so again, now they're designed to verify a balance or a transaction back to supporting documentation. So we want to vouch, we want to trace. Okay, so this here, $100. Let's just say that's on January 15th. We're going to go to the clerk. Can you pull this Manitoba Hydro invoice for $100? Okay, great. So what we're going to do is we're going to vouch it. Okay, and we'll look at the invoice and blah blah blah, and then we'll look at the amount. Okay, $100. $100 flowed into that amount. That's correct. And then later we'll look at the payment. How did it get paid? Okay, well. It came into this. We're going to trace all the steps. Came into the system. Okay. Someone entered the hydro bill. Okay, as a payable. Okay. Eventually, the payable got paid. It was paid by check. So we're tracing all the steps. Did it go to the right account? Well, in this case, it did go to the right account. Now what we got to do is now we're stumped. If we got an error, where are the other 9 payments? Where did they get applied? Sometimes it's easy enough to figure out. You can just do a search Manitoba Hydro and you'll see those payments. But a problem is now we have an internal control issue. Okay. Why wasn't management notified? Because you should know once you're in a management position, you should know you have a monthly hydro bill. Again. So someone's not doing their job here, and now it's going to audit, and we've got to figure out what the issue is. So again, with these test of details, we are vouching vouching the expense recorded. So we're looking at the details. Okay. So per the textbook, vouching is taking a balance or a transaction from the underlying account records. Okay. And verifying it by agreeing the details to supporting evidence outside of the accounting records of the company. Okay, so you're going to hit existence. So yeah, this expense does exist, okay, and it occurred. Now we know it existed. We know it occurred. Well, but we're missing completeness because we know that there's 9 expenses in there for each month that have not been included. So the GL expense is not complete. Okay, so when we vouch, okay, that is going to get our test of existence and occurrence. When we trace, okay, now that's tracking a source document to the accounting records. Okay, they're very similar. Okay, and in fact, I often combine them together, but they're not. Okay, so again, tracing is for the completeness assertion. Okay, so again, we got an issue with that utility account. Now, how much of the balance do we test? Okay. So we got our utility amount at $1,000. Again, we eyeballed it before. We said, well, something's off. I don't know what it is, but why do we not? Because on average, it should be 500 times 12 is 5,000. I don't know, 400, 3 something a month on average, and we don't even have that. So again, what we need to do now is, of that $1,000 balance, how much do we test? So testing decisions require professional judgment of the auditor. Again, that's through experience. So consideration is given to the type of evidence available. So the auditor typically will not perform procedures on 100% of the balances within the financial statements. It's just, you can't do it. It's impossible. So again, we've got to go figure out, okay, well, how much should we do? Well, again, audit sampling typically involves, okay, we've got to look at Canadian Audit Sample 530, and that'll give us a little bit of direction. So another key factor is the auditor's ability to rely on computer-generated data and reports. Okay, so we're going to get into that later. I think it's near slide 30, 29 to 30. But again, testing the details is important. Okay, so other common tests of transactions can include tests of client-prepared schedules. Okay, so an example of that would be you ask the client, can you give us your capital asset addition list? Okay, so basically what that's telling us is, okay, these are all the assets that they've added to the company, and these are their depreciation rates. So we're going to go in there and we're going to test. So I said, okay, well, if they added this, that should be on the GL. Okay, we're going to test the details. Okay, we're going to vouch, and we're going to trace. We're going to go look around the yard, see if there's anything new, anything that comes up in that we notice, anything new, anything different. Okay, and then we'll compare that to the client's list. Okay, and again, get supporting documentation to ensure those numbers are right. Recalculate. Now, we also might use confirmations, not for capital assets, but they might have a schedule of bad debt, or they might have their AR list. Okay, so with the AR list, we don't know if company XYZ really owes that company money, but we're going to send out a confirmation. Okay, or we're going to look at a subsequent period to see if that amount gets paid. Now, we may perform some tests at an interim date and do a roll forward, which we talked about already. And we may test underlying data as part of those analytical procedures. Okay? So again, with that test of details, again, we're going to trace the steps of payment, and by vouching, we're taking an invoice and we're matching it to what's been recorded in the system. Two very important substantive topics, okay, or substantive audit procedures. Now again, since we're doing a lot of substantive testing now, the reason why is because there was bad internal controls. Okay. So if we found out, yes, there's good internal controls, we would just maybe vouch one transaction. Okay, and if every step was followed through, we don't have to worry about doing all these substantive procedures. But we're doing substantive procedures because we cannot rely on their controls and there are inherent risk. Okay, So another couple common tests of transactions might be tests of income statement accounts for account classification. So that was our issue here. It was those hydro bills were probably applied to the wrong account. So account classification, again, we'll look into that and we'll cover off any issues there. Now, we might have tests of individual transactions by vouching to supporting documentation. Again, that's part of the whole GL thing. Okay. Again, looking at these numbers, let's pull the invoice. Now, analytical procedures. Okay. This is before where I said, okay, well, how do we go from $4,000 of utility expenses to $1,000? Well, something just ain't right. Well, that's an example of an analytical procedure. Okay. You're comparing absolute data. So in this case here, analytical procedures can be used as a primary or persuasive test of a balance. Okay. We may want to corroborate, okay, that number with other numbers. So, for example, when I was doing an audit of a community center, okay, they would have hockey registrations as revenue. Okay. So hockey registration revenue in let's just say 2019 was $40,000. And in 2018, it was $50,000. Okay. So our revenues went down $50,000. Okay. Fine. We might want to look into it. We might want to ask the bookkeeper, how come hockey registrations went down? Well, two things. Okay. Likely, less kids register. Okay. And it can't be completely less kids registered. Why? Because usually you're going to have an increase every year. Okay. But more than likely, less kids have registered. Now, so this is revenue. But you're also going to have expenses. Okay. So they take in the money and then they pay out the money to Winnipeg Minor Hockey Association. So registration expense, let's just say it's, in this case here, 50,000 of revenue, and the club has to pay out, say, 45 in expenses to Winnipeg Minor Hockey. We would suspect there should be a correlation there. So we should suspect, since hockey registration revenue has gone down, our registration fee expense should go down as well. So now here we're sitting at 39,000. Something's off. Okay, so again, we're going to want to look into that, and that's auditing, looking into things and why these balances have changed. So we want to provide at least some minimal level of support for the conclusion, so that we could say, you know, we looked at these revenues and we look at these expenses. Okay, there's a correlation there. Now, in here, there's not a correlation. There's something weird going on. Now, we may be able to back that up. Another good example is bingo. Okay, so a lot of community clubs will have bingo revenue. Okay, so let's just say that their bingo revenue in 2018 was $100,000. Okay, and in 2019 it was $80,000. Okay, and bingo expense. So here, let's just say that in 2018, the bingo expenses were always, including bingo payouts, so bingo payouts, wages, and bingo cards. So let's just say that it was always 80% of revenue. So our expenses are $80,000. So, and it's very similar throughout the years. So let's just say in 2019, it's always 80%. So we would expect this to be $64,000. Okay, so we calculated out 80%. Okay, it's stayed rough. Again, it's corroborated. The revenue is corroborated by the expense. But let's just say that the bingo expense is now only 40,000. So 50%. Okay, so the bingo expense represents 50% of the revenue. We're going to say, well, that's really low. That doesn't happen like that. It should be at least, by our calculations, it should be at least 64,000. Now there might be an explanation, but that's doing analytical review. That's saying, hey, dive into it. Go see what the issue is. Okay? Pull up all the revenue. Now you're going to have to start testing because if it doesn't pass the eye test, you got more problems. So again, that's really analytical can save you a lot of headache. Okay, especially if you know your client. So analytical procedures can be the most effective test of a balance, okay, or at least reduce the extent of other substantive tests. Okay, so again, analytical, again, it's a great tool. Okay, and you'll notice, no one thinks they do an audit in life, but you'll just when you start to eyeball things, it's the number test. Something just doesn't seem right. Okay. So types of analytical procedures that we might have are comparing absolute data comparisons, like we have here. Okay, we might do some ratio analysis. Okay, so activity ratios, liquidity ratios, profitability. Okay, we might look at trends. Okay, over several accounting periods. Well, we've seen a trend. Maybe bingo revenue was a downward trend. Okay, less people are playing bingo. Maybe more people are playing BLTs. You might notice differences with attendance, and everything should tie in. There's usually always a logical explanation. Okay, so we want to dive in and look at these types of analytical procedures again to support these numbers. So we'll look at it analytically, okay, and then what we're going to do then is go look at that GL because we're going to have to test details. Okay, just eyeballing it isn't enough. In a review engagement, that's all we do. We eyeball it, then go ask questions. In an audit, we eyeball it and then go pull up because we want to test the details. Now, we may look at, again, financial statements, do a break-even analysis. Sometimes you can do that, sometimes you can't. Now, how do we improve the reliability of these analytical procedures? So we want to mitigate risk of accepting the account as not misstated, okay, when it is material misstated. So we don't want to make an error. We don't want to say, oh yeah, the balance is 80,000 when it's really, I don't know, 60,000. Okay? We don't want to do that. We want to get the amounts right. So consider the relevance of analytical procedures. Okay, so sometimes they're less analytical is less useful. Why? Well, you might have a client's operation that is diverse. Okay, so it may always be changing. If industry data is unreliable or not comparable to the client, so we don't want to use it. Okay, industry data I don't like to use, but sometimes it's okay. In the restaurant biz, you're always looking at 35% cost of goods sold. Okay, that's now. Most of the time it works. If we're in a period of severe inflation, analytical review isn't really going to work, okay, because costs are going up, and greater speed, I guess, than revenues. Now, when a client's budget process is not controlled well, sometimes you compare a budget, sometimes you don't. I've never been a fan of comparing a budget. I just find a budget as a waste of time. Internally, you can. But externally, as an auditor, I just don't. I don't think it does any good. Okay. Now, it's even less reliable when it's not well controlled. So if you can't gain any assurance on a budget, which you can't anyways, I don't rely on budget at all. So now we want to look at the reliability of this data. Okay. So we want to test the reliability of aging reports. So aging AR. Okay. Is it reliable? Do control tests suggest that the data is reliable? Okay. So again, we would have tested AR, the control AR feature. Okay. Now, maybe we would have took 2 invoices and followed it through every step. If we're satisfied that all those steps were covered, okay, we can rely on the controls. Okay. And if we can say, oh yeah, well, they recorded the sale, went through the AR, it sat on the AR list for 37 days, and then 2 months later it was paid. So we followed the process through and there was never an issue. Okay? But if we start to do control tests and we find that the data isn't reliable, okay, now we've got to go through and we've got to test these, we've got to do more testing of these accounts. So if we can't rely on control tests, we've really got to dive in and say, is this data reliable? Okay? And that's why we do a lot of analytical testing. So to summarize our analytical procedures, we want to identify computation and the comparison to be made. Okay? So utilities, whatever. We can go through account by account on our trial balance. Okay? Now we want to assess the reliability of any data to be used. Again, is it reliable? Well, we're only going to know that through testing. We want to estimate probable balance or outcomes. We want to perform computations using internal or external data. Again, that will be provided by the client. Compare an estimated amount with a calculation. If there's any massive difference, we want to look into it. Okay. An example there is PST and GST. You can calculate what those balances should be. We want to determine appropriate procedures for investigating reasons for the difference. Perform procedures. That's the actual analytical testing. And the test of details, okay? And then we want to draw a conclusion. Yes, we think that the bingo revenue balance is accurate. Okay? Something along those lines. Now, lastly, with the continued development of programming or computer programs for audit purposes, it's making things a lot easier. Yeah, I've never used these in real life, with the exception of Excel, which really isn't an audit tool. Okay, or a computer. So it's called a CAT, Computer Assisted Audit Technique. So this assists auditors with their testing and complex tasks. CATs are more useful when client controls are stronger. So not CAT, it's CAAT, Computer Assisted Audit Techniques. Okay. So this is, we'll put the numbers into a system, and it'll spit out areas that we should look into. Okay. So the 2 main categories of CATs are software that's used to interrogate and examine clients' files. Okay. So what they'll do is it'll re-add, it'll select key items for us, it'll handle our large volumes of data. Okay. Now, software that individuals use to plan, perform, and evaluate audit procedures, regardless of whether the client is automated or not. So again, audit firms are going to use a system, okay, regardless of the client. Okay, again, why? Because it's going to help them look at key areas as well. Now, again, you're so more than just the eyeball test. So you got to remember, there's a massive difference between doing an audit of Great West Life and doing an audit of the local community center. Okay, it's just completely different. The amount of work required is a lot more. Okay, so that gets us up to page 816 for today. Okay, so again, analytical. Just remember, you test your substantive audit procedures. Okay, so you're testing details, you're doing analytical procedures, and depending on the client, you might use CATs. Okay. So again, try the couple questions that I've laid out for us up here, and go forward with that today. Now let's go through to page 16 to page 819. So dealing with levels of evidence. So this is for Tuesday's class. Okay. So Tuesday, May 5th. Let's look at levels of evidence. So this starts on page 816. So evidence from different types of substantive procedures varies in persuasiveness. So persuasive evidence is suitable as a primary test of a balance. So it provides a reasonable estimate of a balance, okay, enabling the auditor to conclude whether or not the account balance is free from material errors. So no further procedures are required once we get that persuasive evidence. Okay. So from there, we also have, so what would be examples of analytical procedures that provide persuasive evidence? Let's look to table 8.2. Okay. So we have here some examples. Charges for depreciation. It says the analytical procedure would be to refer to the asset balance, the effective additions and disposals, and average depreciation rate. So again, you'll take the client's fixed asset listing, okay, and you'll recalculate some balances. Okay? You'll look up, do these rates that they're using, are they permittable? What else do we have here? Payroll expense. Now, what we're looking at there with payroll expense, we're looking at analytical, we want to look to, it says here, refer to the days accrued and average daily payroll or subsequent period's average gross payable. Again, I don't know if I like that for payroll, but let's pay commission expense. It says here, refer to commission rates and related sales. So if we have sales of $10 million and the commission salespeople all get paid 5% of sales, well, we know that our commission expense should be approximately that amount. If it's way off, then we got to dive in and see, well, what's going on? Like, why is this not correct? Okay. So it really depends on the type of information that we're looking at. So persuasive, that's persuasive evidence. Now, corroborative evidence is, it confirms audit findings from other procedures. Okay. So corroborative evidence would be, like I said here, comparing bingo expenses with bingo revenues. Okay. So yeah, before we're going to dive in, we're going to get that persuasive evidence. Okay, we're going to dive into testing details, analytical procedures, but we want to be able to corroborate. Okay, so it's going to support our audit findings from other procedures, supports management representations, or otherwise decreases the level of audit skepticism. Okay. So if management went to say, and said to us, yeah, revenues are down in bingo, expenses are down as well. That's normally what we would suspect, right? But when we go look at our corroborative evidence and say, well, you said it should be, revenue should be down, sorry, expenses should be down in proportionate to revenues. Well, they should be down 80%, not 50%. We've got an issue there. Now we've got to look into it. Okay. So again, that's corroboration. You're corroborating what management said to the actual numbers. Okay. Now it also allows the auditor to limit the extent of other procedures in the area. Okay. So again, if we get support and everything lines up, great. You don't have to go any further. But if it doesn't, like in this case here, now we've got to start looking into why are these balances out. Now, unexpected results would require the auditor to expand other substantive audit procedures to provide an explanation of the result. So again, we like this number, that makes sense. Tie that in with management, we'll test it a little bit. But this is out, we really got to look into that $40,000. Why? That doesn't make sense. I think we have a classification error. Again, that's an unexpected result. So again, levels of evidence. We see an example of that at the top of page 818. Okay. So let's look at an example if we want to corroborate evidence with, I don't know, something, payroll expense. Okay. So maybe we'll compare the payroll tax expense with the annual payroll times the statutory tax rate. So again, if our payroll expense is, say, $2 million, okay, well, our payroll tax should be a percentage of that amount. So little things should tie in. And when we don't get that tie-in, that becomes an issue. We're not going to rely everything on corroborative evidence. So the corroborative evidence is going to support the persuasive evidence, so the actual. Okay. So, example, a simple comparison with previous year to year will help identify a problem, not reduce other testing. Okay. Again, that's just going to give us a bit of direction. Now, the usefulness of the procedure to generate more persuasive evidence depends on the circumstances. Okay. So, again, it's tough to understand auditing until you've actually done it, okay? But again, you always want to get evidence to support your opinion. Okay? So let's look at some analytical procedures that provide minimal evidence. Okay? Now that example is page 818 at the bottom. Now, trade receivable. We want to understand the reason for any large credit transaction or balances on the ledger. Okay. We also might want to compare the number and amounts of credit notes issued with those of the prior periods. Okay, so if numbers are off, I would expect if sales were increasing, I would expect my AR to be decreasing. If sales were decreasing, okay, I suspect my AR to decrease as well. But if it's not, if one's increasing when the other is rising, we have an issue. Again, we want to look into it, and that's all analytical. So that wraps up that doesn't wrap up chapter 8. What it does is it covers off, again, slide 15 to slide 40, and pages 811 to 819. Okay. So what I'd like you to do is read over the chapter. Hopefully the video is okay. And then for Wednesday's class, we'll review some of the answers, and we'll look at the topic of 8.5, which is evaluating and documenting substantive analytical procedures and results. Okay, so again, try these questions today on Monday. Okay, 8.6, review question 8.6, problem 8.5 and 8.6, and then on Tuesday, okay, the reading 8.16 to 8.19, review question 8.7, and problems 8.7 and 8.8. And we will review those on Wednesday. Okay, so no video for this class tomorrow, but we'll review the answer on Wednesday, and we'll cover the topic of, let's say, 8.5, which is evaluating and documenting substantive analytical procedures and results. All right, have a good day, and we will see you Wednesday.